Okay, welcome back everyone. First things first, Eid Mubarak for those that celebrates, to our Muslim friends that are celebrating the big day for the year, I guess. Um, Happy celebration. And we're going to get started with the inflation numbers tonight. And obviously this is going to be a very important inflation numbers. A lot of stuff has actually been set up for it, and I'm quite liking the current market conditions. And hopefully, yeah, the inflation number goes up, and we'll see what happens. And hopefully, we get to inflate our account as well. Okay, my name is Vida and Jero. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or linked to its presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reactions to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. And especially for tonight, I think we might see liquidity dry up really quickly. So just be mindful of what could happen. Market has been on a pause for 3 days. Today is day 3 that we have seen a range-bound market condition. So we'll see what happens there. Just be mindful that liquidity does tend to dry up, and we could see that extra volatility tonight. So be very attentive when determining the volume of your transactions and consider all possible risk factors. And I think there was a question asked on Monday, should we just go with a higher lot just to aim for a couple of pips? Right or wrong answer to that one, it's really up to you. Okay, so if you can manage the risk, it's completely up to you on that one. Just make sure it's relatable in terms of your equity risk. Okay. All right, there are going to be bonuses for participants. Obviously, that's going to be the promo code TW deposit bonus. So that's 100% deposit bonus, and I'll show you that promo code soon. And if you have registered through the Octa website, you should have access to the private Telegram channel via email. If you're new, you will probably be receiving it on your email by now. If you have been attending our sessions for the past year, then no problem at all. You should already be in the Telegram channel. All right. So a little bit about myself before we started. My name is Vera Njoro, full-time trader with over 20 years of experience full-time trading, more than 20 years, if we consider dabbling into the market. And I've been a professional trading coach and technical analyst since 2007. And when we talk about coaching, it is more on the performance coach. So yeah, not just about teaching people how to trade, but actually guiding traders how to be good with it. All right, I'm also an expert in Ichimoku Kinko Hyo technique, which is a Japanese charting technique. If you're curious, we have already done Ichimoku techniques on this channel. So if you want to look it up on the Octa Broker channel, you should be able to find, I think, about 4 videos on those. I also own a company called Zanifix, an independent market consulting company. I've been a guest speaker at Trading Investing Expos across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analysts Associations. All right. So this is the promo code that you can use. It's non-farm 2024. It is valid until 31st of December 2024. This is to double your deposit bonus or 100% trading bonus. All right. Cool, audio seems to be good, and we are gonna go through with some of the theories tonight in terms of what the inflation is. I'll also discuss what's the potential outcome for tonight's inflation, a couple of scenarios to talk about, and also getting ready to set up our trades. So we have about 20 minutes to go before setting up our trades, and here I am hoping that the market does not move before the data is released, because it has been good and we really want to see that range bound market condition, and that's something that we have been picking up for the past 3 days. And obviously the market is kind of jittery about this and not really wanting to open a position. So this is where I really think that liquidity could dry up really quickly when the news is released, and we will see a little bit of an extreme volatility. A lot of the market participants are obviously waiting for this data because they want confirmation whether or not the FOMC is actually going to start cutting rates in June. Okay, so what is inflation? Inflation is the rate at which prices for goods and services rise. And the most commonly used inflation indices are obviously the consumer price index, which includes the core inflation as well. And those two are going to be the data that we are going to be talking about tonight. I believe the PPI numbers, it's going to be tomorrow. Okay. Same time tomorrow is going to be the PPI numbers from the US. So what's the difference between the two of them? We'll talk more about that soon, but the CPI is basically a critical indicator of pricing pressures. In an economy, it provides a gauge of inflation. And obviously, forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. And for tonight, obviously, we are focused on the US dollar side of things because we're looking at the US inflation number. This is a good gauge, but definitely not something of a benchmark for 2024. I think the current inflation situation across the world globally, it is kind of a little bit different compared to what it was maybe about 2 years ago or last year, where everything is just going up. This is kind of different this year. So we're going to take a look at them individually for 2024. All right. So what is CPI? CPI basically measures the cost of living, and it includes broad range of goods, services purchased by consumer, includes international personal consumption items. So if you imported something from overseas, that's going to count into the CPI numbers as well. Scope exclude changes in interest rates or costs, while the PPI, it's kind of the opposite. So the CPI, it's more on the consumer side, right? How much are we paying for a bar of soap, for example? And the PPI, it actually measures the opposite. How much does it cost to produce that bar of soap, right? Obviously, the PPI and the CPI is going to scale differently for a few different factors. But PPI, this one here measures real growth in output. So considering whether the CPI or the PPI is actually going to have a much bigger impact onto a whole GDP, I would say the PPI does more compared to the CPI, but the CPI measures, the cost of living. And the thing with the inflation rate that we have here, if you're looking at a 3% inflation number rate, right, that's not constant at 3%. That's basically the annual growth of the inflation rate. So every year, if it stays at 3%, for example, it means inflation or prices goes up by 3% every year. And that's basically how we look at inflation. It's not like, oh, inflation is at 3%, it's constant at 3%. It doesn't work that way, okay? It's a growth rate, and basically inflation continues to grow year on year. Basically the same thing as a GDP, unless we have a negative inflation, which is something that's very rare. All right. So the PPI measures real growth in output. It includes items produced for personal consumption. It does not include imports because it's more of a local production cost. Encompasses services which with prices including an interest rate component, while the CPI does not have that interest rate component. Okay, cool. We good on that? All right, the next thing we take a look at is core inflation. So what is core inflation? Core inflation refers to the change in prices of goods and services, excluding those from the food and energy sectors. And when we talk about what's excluded here, obviously energy costs is excluded, gas is going to be excluded, food, fresh produce is going to be excluded, tobacco is going to be excluded, alcohol is excluded from the core CPI. And the reason for this is that these prices tends to be a little bit more volatile with changes in taxes, for example, for tobacco and alcohol. So to measure the underlying inflation, this items are basically taken out of the core inflation measure, okay? All right, because the prices tend to be more volatile, okay? And they are determined by using the CPI numbers as well. So we will have the CPI. I'll actually have a little bit of an example tonight just to show you what CPI excluded on the stuff there, okay? All right, so we'll take a look at some of the expectation for tonight. So the theory part is pretty clear. I'm going to talk more about what's likely going to happen tonight. Okay, about any questions about the theory, do let me know and we'll go through that. Okay, bear new. I'm not quite sure what bear new is, but yeah, if you want to expand a little bit more on that. Okay, so bearish news. I'm not quite sure. Look, I would say we want to go in for every inflation with an open mind. I really don't want to have a bias, but I'll be honest with you, I do have a little bit of a bias, and I'll explain a little bit more later on what kind of bias I have. All right, so let's take a look at the inflation rate first, year on year, the most bottom one. So we got 3.2% previously. And then the consensus and the forecast is exactly at 3.4%. So basically market, look, I'm not sure if this has already been priced into the market. I do not think that market has priced in fully for 3.4%. I think there's a little bit of a hesitation from the market to assume that inflation is going to jump up to 3.4%. And I think that's a safe way to look at it, okay? Inflation has been going up. We've been gradually picking up from 3.1, 3.2. Now the market is expecting a consensus of 3.4%. And I'll be honest with you, I don't think this has actually been priced into the market, okay? So if it does come in at 3.4%, it will actually push the US dollar higher. And one of the alternate scenarios that we could have, what if it comes in higher than 3.4%? If it kicks in or it clocks in at 3.5%, it will push the US dollar significantly higher. And as I said, I do have a little bit of a bias. I'll explain in a minute later on. Yeah, sell stop looks good, Roy. And that's me here. I don't like to use the word hope when it comes to trading, but I really do wish that the next 15 minutes the market doesn't move before the data is released, because the sell stops are good. Okay, the buy stop and sell stops are good for tonight. All right, so 3.5%. What if it comes in at 3.5%? It will jolt the US dollar up. Simple as that. I don't think there's I don't think there's any way that the market can ignore that. If it goes up beyond 3.4%, if it comes in at 3.5%, I think that's an instant buy for the US dollar. It would cost the Euro USD, the Pound USD, and the Yen basically just slump. So just be mindful of that. And I'm looking at that as the best case scenario for the US dollar. And as I said, I don't want to be biased, but right now I'm very biased in terms of the US dollar, because we have expectations from the FOMC. We have a couple of new scenarios for the FOMC to not cut rates in June. June rate cut, in terms of what the market consensus is, it is right now at 50-50. Okay, so the sentiment has shifted. It is about 50-50 probability right now for June to not have a rate cut from the FOMC. And obviously for that to happen, the inflation data for obviously the release this month and next month, hopefully it may be up until June, we see a constant rise, or it remains sticky, i.e. it doesn't want to go down below 3%. So that's kind of the threshold that we have here. Okay. What about the core inflation? The core inflation is still expected to come down 3.8 to 3.7%, and that's completely fine, right? The headline inflation can shoot up, the core inflation can come down, and that's completely fine, because the core inflation, in terms of how fast it comes down very slowly. So it's not really a problem at all if we have 3.5 and then core inflation is at 3.7. I don't think that's going to cause a lot of headache. Or even if it comes in as consensus, 3.4 and 3.7, I don't think we are going to see a lot of selling on the US dollar at this point in time, because the core inflation is still going to be slow in terms of how fast it come down. Unless the core inflation comes in at 3.6%. If core inflation comes in at 3.6%, then we might actually see the US dollar weakens. So just keep that in mind. The only mixed data that we have here is that we have the headline inflation goes up, and maybe comes in at per consensus at 3.4%, and the negative for the US dollar would actually come in or play out if the core inflation comes in at 3.6%. Okay? But other than that, I'm looking at the current market condition. I look at prices in the past 2 weeks. I don't think we have fully priced in for 3.4%. So yeah, I think even if it comes in at 3.4% according to consensus, it would still be a boost for the US dollar. All right. I'm already placing. That's a little bit too early. You can place it, but yeah, it's up to you. I'll place it in about 5-10 minutes time, but we'll do it slowly. All right, so this is the chart that we have here in terms of the inflation numbers. And obviously, let's take a look at the past 2 months. For January, we have 3.1%. Consensus was for a drop from 3.4 to 2.9%. We didn't get that. We got 3.1%. All right, so January was higher than expected, and still about 3%. February number, everyone is expecting for it to remain at 3.1%. It went up to 3.2%. Okay, but the forecast for that matches. So if we take a look at the forecast on those 2 months, on the January and February number, it misses the consensus, but it is exactly as per forecast. So the number for tonight, we are expecting a consensus of 3.4%. We are expecting a forecast at 3.4%. So if you're wondering what is this forecast, this is a forecast done by Trading Economics. Okay, so it is not the actual consensus. Now, consensus are basically a surveys that was sent out to analysts that responds to it. I've been invited to answer one of the surveys for Australian inflation number and interest rate, so I know what it is like. If you really want to know the consensus, it's usually just a survey of about 27 to about max about 40 analysts that was actually requested to be part of the survey for that consensus. Okay, so right now for tonight, we are expecting an increase from 3.2 to 3.4%. Now let's take a look at the components of it from last month. And normally I didn't show it to you, but I think for tonight, I think it's starting to be a good time to show it to you why inflation is starting to push up again. So if we take a look at the core inflation, that's expected. We see a 0.1 drop every month, and that's okay, right? So the core inflation is obviously the main component of the inflation number itself. And then we have the energy inflation. If we take a look at the energy inflation, it was negative 4.56 the previous month, and then for January, and for February, it went up to negative 1.9. So obviously that's the largest increase in terms of what's pushing inflation up. So energy prices is pushing it up. And if we take a look at oil prices and gas prices, it has been going up in the past month as well. So this is why some of the consensus tonight is it's kind of pointing for inflation to remain at a high level, i.e. above 3%, and potentially even increase itself. Right? Food inflation is coming off. That's okay. It's from 2.6 to 2.2. Rent inflation not really coming off because we're looking at a drop from 6 to 5.74. And if we take a look at services inflation, it has gone up. So cost of services has gone up. If we take a look at the ISM services, for example, it has also gone up. And if we take a look at the services issues here in terms of inflation, this is the same issue that the Eurozone and the UK is kind of experiencing right now. So everything is coming off, food prices coming off, energy prices starting to come off, but services goes up. And if we take a look at the data that we have from last Friday, the average hourly earnings remains high, and it would indicate that cost of services is likely going to increase as well. Employment numbers are increasing. Unemployment rate is stable. In fact, it's coming off again. So, the cost of services will continue to increase as well. So the services inflation will continue to increase. And I think the concern, if we take a look at the breakdown, is the energy prices coming back up and services as well as rent prices. That's basically the main component of what's really pushing inflation up. Okay. Other analysts are also saying that we're gonna get positive results like green. Yeah, look, as I said, I'm a little bit biased, right? Because we take a look at this data. So I've done my own research as well because I have to do my own research for my own company, right? So I do push out a report on this, and the breakdown on the potential for the inflation to go up. A lot of the factors here is that it is likely to push inflation up. And obviously the main concern that I have, and I just shared with you, energy inflation is starting to increase again. Rent inflation is it's pretty sticky. And if you really want to know in terms of the rand scenarios, I can give you a breakdown on Australian inflation number, for example. One of the higher costs is actually the higher rent prices, especially in Sydney. It is so expensive at this point in time. And, you know, those rental units, they are less and less being available. So that's why it's being pushed up in terms of price. A lot of people are starting to move into the capital market, into the capital city, obviously, and this is going to push rental prices in larger cities, and that's just basically the same case with the United States as well. All right. Okay, so those are the data that we have. So this is the core inflation number as per expected. We are looking at a constant drop, constant but steady drop, unless we have that sudden drop between May and June last year. For now, as I say, if it comes in at 3.7%, it's not a big deal, right? It's a 0.1% drop. But if we see a 0.2% drop, then yeah, it is actually very significant. Okay? All right, those are the stuff. Let's jump in on why I'm a little bit biased, because I am a little bit biased on the dollar Japanese yen. This is borderline breaking 152. And I need that higher inflation number to break that 152 level on the dollar Japanese yen. This is the reason why I'm a little bit biased. And on Monday, we actually set up a buy stop, a sell stop, as well as a limit order. If the buy stop is triggered, you need to get out at 153, and it is ideal if you have a sell limit at 153. So tonight, the scenario would actually remain the same. This is the position that I've been positioning for Monday, which is we have a buy stop at 152. And then we have a sell limit at 153. You need to buy, get out, and wait for 153, because there's going to be a lot of profit taking at 153 and potential intervention that would kick in, not at 152, but potentially at 153, even up to 155 on the dollar Japanese yen. All right, let's mark up the sell stops for tonight. This is only 37 pips of range, so don't worry about it. We are going to take the upper range because I do expect a lot of volatility. So for the Euro USD, you can have that buy stop a little bit higher, 1.0885, and your sell stop for the Euro USD is going to be below 1.0850, ideally about 1.0840, 1.0845. All right, very easy, this one here. It does seem like it's huge, but it's only about 38 pips of range. So we have been in more of a range bound market condition for the Euro USD, at least for the past 2 days, right? So 1.0885, 1.0845 for your buy stop and your sell stop. For the pound USD, hopefully this one doesn't grind higher. But yeah, your buy stop, you want to have it a little bit higher, right? You do not want to have it at 1.27 because we expect 1.27 could actually be more of a stronger resistance. So this one here, I'm taking a little bit of a risk. I want to have my buy stop a little bit higher, maybe about 1.2730, right? So in the hope that if it spikes above 1.27, we don't get our orders taken and then be done, right? Also for tonight, set your target for just about 20 pips, right? If you really want to be safe, 20 pips, get out. That should be the safer levels for this, right? For the sell stop, you probably want to have it about 1.2650. So this is a little bit higher in terms of range. But yeah, it's completely up to you. You can have it a little bit lower at 1.2710, but you know, I'll just give it a little bit more room, about 20 minutes to the 20 pips to the upside for the pound USD. Just to give it a little bit extra room. But your sell stop will be at 1.2650 for the pound USD. The dollar Japanese yen already said that. The buy stop is going to be at 152. I'm actually going to push this a little bit lower. It will be at 152, maybe 152.10-ish, right? And your take profit is going to be at 153, but that's the max, right? Because I actually do want to have a sell limit at 153. I actually do have a sell limit at 153.25-ish. If you want to have that, feel free to have that position as well. Dollar Swiss, if you want to trade the dollar Swiss, it's not really optimal. I'll be honest with you, it's not optimal. The buy stop needs to be a little bit higher, about 0.9050. You can have it about 0.9045. It's only about 5 pips, so have it at 50. That would be a much better proposition. The sell stop, this one here is obviously really depends on what you want, right? You can have it at 90.25 if you want to, but if you want to go with the low, obviously you can go a little bit lower, 90.15, just to avoid a little bit of a whipsaw. That's completely okay, because if we take a look at the range here that we have for the dollar Swiss, it's only 12 pips, and if we go between the buy stops and the sell stops, it is actually not much. It's only about 33 pips. So I would have it about 90.15 for 90.15 for my sell stop. Buy stop, I do want to have it a little bit higher, 90.50. The dollar Canadian, I would caution you on the dollar Canadian. Right? Ideally, you do not want to have a trade on the dollar Canadian. The dollar Canadian has been a little bit funny, right? And the Canadian government has actually posted out a statement saying that they're actually a little bit confused with the Canadian dollar strength as well. So the Canadian dollar and the Japanese yen are actually more or less in the same situation. There's not going to be an intervention from the Canadian government or the Bank of Canada, but they did mention that it's weird, right? We see oil prices going up, but the Canadian dollar is still being pressured by the US dollar. So I would actually want to avoid the dollar Canadian at this point in time. All right. All right, gold. This one here, you need to go on the hourly time frame in terms of the buy stop and the sell stop. Then the problem with gold is obviously the same thing. I would be a little bit more cautious trading gold. Just a reminder of what happened during NFP. We have a sell stop so that was triggered. The news was actually good for the US dollar, but again, gold prices continue to go up despite the US economy being stronger and the expectation that the FOMC would actually cut interest rate. Sorry, the FOMC would not cut interest rates. So I think the market right now for gold, this here is a little bit risky. Just be mindful that at any given moment gold can collapse. This is already pushing whatever it can push, and it is a little bit extreme. And you can see that run there for the past 2 months. It is not a healthy run. But for tonight, your buy stop would be a little bit higher. It'll be about 23.67, 23.68. Your sell stop is going to be about 23.37. Just to give you a little bit of a perspective, the range between the two of them are basically about $23, right? So $23 is not something to laugh off. Just be mindful of what you want to do. Unless you want to trade on a 50-minute time frame, then yeah, you can have a small sell stop and a buy stop, but I would definitely caution you on this one here. Just don't get too greedy. If you like your profits, get out. That's completely fine. So you got 2 sell stop and 2 buy stop for gold. Okay. I might actually, I'll delete this one first for gold. I'm not placing a position on gold because I don't like that. Hopefully I managed to get out of it before it causes any problem for us tonight. So yeah, there's a lot of risk for gold. Just be mindful. Data's going to get released anytime soon. So get your positions ready. I think the closest one is the dollar Swiss at this point in time. But the range on the dollar Swiss, it's really small anyway. So we'll see what happens. What's the inflation number going to be? Just be mindful for gold. The sell stop just to keep. Oh, okay. Inflation. Come on, come in. All right, inflation is at 3.5%. Right, higher than expected. 3.8% for the core inflation. Again, higher expected. We need to close out the other position. So sell order on the dollar yen needs to be closed. Euro USD, pound USD. Okay, just got triggered. I think Euro USD and pound USD just got triggered. And yeah. It should be an easy run for tonight. Okay, so as I say, inflation rate could go up. We got the best case scenario at 3.5%, and core inflation doesn't go down at 3.8%. So let's take a look at the breakdown as well. See if I can actually share the breakdown on inflation here. All right, so this is it's kind of pushing up, pushing down a little bit lower. Let me just caution you on gold. Okay, so I do not like gold for one reason. It's not the market sentiment right now for gold. It's like there's a lot of euphoria pushing gold right now. I know China has been stocking up on gold prices as well, so this is still holding on strong. All right, target is for about 10 to 20 pips. Just get in, get out, be done with it. All right, you're sit done. That's awesome. Good. So yeah, I'm getting up for the Euro USD as well. I think it can push down a little bit lower, but we need to be mindful of 1.08 as well. If we break below 1.08, I would actually add more position into the Euro USD. So yeah, if you're looking at that push lower below for the Euro USD, I'm actually going to create a new sell stop at 1.0785. I'll pick it up if it does break 1.08. Index, yeah. Let me just monitor this trades first. Index for NASDAQ. Oh, this is a free fall. But NASDAQ, in terms of the sell stop that we have, you kind of need to go with the daily, unfortunately, because the range, we have been seeing that range basically on this one here, about here. Basically, that's the range for NASDAQ. So you need to have a lower sell stop on NASDAQ, but again, it's too low. I don't think it's actually good if we trade this as it is. And it's a little bit too late to jump in on this one here. Good thing we didn't order a sell on the buy side because we do have a little bit of a whipsaw on this one here. All right. So let's see what happens. Pound USD is pushing out, pushing. About 1.26, you need to get out. So yeah, about 1.26-ish. That's kind of about the max if you really want to stay in this trade. 1.26. Just be mindful of 1.26. Okay. The dollar Japanese is already laid out, and this is already obviously above 152, right? So this is already at 152.45. As I said, 153, you need to get out. Okay, I don't care what it is, just get out 153. See the situation at 153. If no intervention kicks in, and market continues to push above 153, then you buy in again towards 155. But no matter what, get out at 153. Do not, do not ignore what the Bank of Japan, sorry, the Ministry of Finance in Japan can actually do. Okay, 5% growth. Thank you, sir. Yeah, you can. You just need to be mindful on the Euro USD. At 1.08, we have exceeded 1.08. So yeah, that's completely fine. I already have a new sell stop a little bit lower at 1.0785. That's likely going to get triggered soon. Pound USD, we'll see if it breaks 1.26. But yeah, let's see what happens there. I'll adjust this to 1.0780, just in case, because we do need to be mindful that 1.0780 was kind of the borderline. It was previous support, turn resistance, kind of stuff. All right, dollar Swiss, feel free what you want to do, but it's already 20 pips, so get out. Dollar Swiss, 20 pips is a lot. I would get out. Pound USD is up to you what you want to do. It's about 80, 19, 20 pips, but I'm aiming for it at 106 level. So we'll see what happens with the dollar Japanese yen. This is actually the one that's actually very interesting to me. I'm really curious, how brave is the market, to take on the intervention from the Ministry of Finance. I'm not really sure what's going on here, but I'm expecting, because we're already at 152.50, we don't see a quick sell-off. I think we're seeing positions being added into this. I think we could see 153 before everyone starts to get afraid and probably get out of their positions. All right, so gold is the one that I'm a little bit more on the cautious side for gold. I'm not sure how strong the push can be, but if you already have that sell stop for gold, Roy, for example, you already have that. You got that. The best case scenario right now, because we're expecting a strong push for the US dollar, you can move your stop loss to break even just to protect a position. Especially for gold, this is a high risk assets. Okay, so just be mindful if you are profiting from gold right now, make a decision, get out, or move your stop loss to break even. And if you want to hold your positions. On Euro USD, 1.0860, should I push stop to break even? You can. If you want to, yes, you can. Because our break even is a little bit higher, right? 1.0850, right? It's, it's pretty high. It's up to you, Chucks. Completely up to you. It's 50 pips, you know. If you want to get out, it's not a bad 50 pips at all. All right. Just as a disclaimer, as I said, I'm a little bit biased because I'm curious on the Japanese yen itself. But at the same time, I do a little bit of a carry trade on yen crosses. So my position does get hedged a little bit from the euro yen and sterling yen. So we'll see what happens in terms of yen strength. Right now, I'm actually not looking at a lot of changes in my position because the dollar yen goes up, but the euro yen and sterling yen get pushed down lower because of that stuff. Got 40 pips. Look, more than happy. Look, with any of these trades, right? 40, 50 pips, you know, that's awesome stuff. You can get 75 to 100. That's an even better day. But, you know, right now, if inflation goes up like this, I'll be honest with you. Coming up from the FOMC in the next 2 months, I think we'll be hearing a little bit more of a hawkish tone. A lot more, you know, market speculation on the rate cuts for June. That's probably going to decrease the probability of a rate cut in June. It's probably going to drop down below 50% after tonight. All right. All right, we good? So yeah, it's up to you. What do you want to do with the Euro USD? Whether or not you want to start opening out a new position. If you do, you have a new style stop at 1.0780. You can do that. I think we would have enough of a strong push lower. But yeah, NASDAQ. You know, if you really want to trade NASDAQ, I wouldn't recommend it because it's at 17,900 right now. Your sell stop is at 17,757. That's about 200 points to the downside. So I don't like it at all. You know, I'll be honest with you. Oil prices, we shouldn't expect a lot coming up from oil prices. But yeah, Euro USD, see what happens here. Once it breaks 1.0780, we should be more in a one-way directional movement. Yeah, it just triggered. So yeah, all of them are triggered. Feel free to move your stop loss to break even, right? On the Euro USD if you want to. I think one of the position on the Euro USD was Euro USD got closed out, so that's fine. So you already have that Euro USD from up there. You can move your stop loss to break even if you want to. Stop loss for pound USD, you can move it to break even as well if you want to, or right now it is about 30 pips. Feel free if you want to get out. But I'm looking at about 1.26 to find a little bit of a support for the pound here. Gold will go in bullish tonight. I have zero comments on that. I'll be honest with you, right? I have zero comments on that. Okay, so we should be seeing a little bit of a bounce if it does close above 1.08. Look, we're only about 9 minutes in, right? So most of the positions that we closed out was a little bit earlier than what we expected. But yeah, we'll see what happens. Dollar yen is starting to slow down. No, it's starting to still push higher. Oh, very curious here to see whether or not we can actually surpass 152.50 in this hour. If we do surpass 152.50, then yeah, that's where we're gonna go for the dollar Japanese yen. Obviously, this is the most interesting one. Resistance 3 for the week is obviously still going to be at 153. So, you know, no matter what, if you have a long position on dollar Japanese yen, I would caution you that we are playing with fire here with any yen crosses because we're pushing the Ministry of Finance and Japan's buttons right now, right? It's like saying, hey, we're gonna intervene, and every trader's just like, hey, we don't care. We just want to push you up. We want to see your limits, and it's good, right? Otherwise, we don't know their limits. We do have a little bit of an estimate in terms of their limits. We're looking at 153 and 155 for those limit of intervention, but yeah, the reason why we still went long on the dollar Japanese yen is the logic is that even if it surpasses 152, right now maybe the the government in Japan right now is panicking right now. What should they do? Should they execute that intervention? It will take time. They haven't done any rate checking. It will take time, and we do have a little bit more room to go. So we're pushing the button a little bit for 153. A little bit of a risky trade here, but it is something that, you know, I kind of enjoy right now at this point in time. All right, sterling yen, it is being very limited right now at about 193. But again, the expectation for the sterling yen is that it could potentially push higher towards 194.75, you know, 195, provided market doesn't come down below 191 on the sterling yen. So I'm just looping for those that are following my yen trades. Same thing with the euro yen. As long as we're above 163.50, that's completely fine. This one here is kind of pushing it up a little bit. We are looking at the euro, probably going to be the weaker currencies. If we take a look at the euro pound, this one here should be going down. Yeah, the euro pound is coming down. In terms of the euro or the pound, the euro is probably going to get pressured a little bit lower. And reason being, the euro, the ECB they are basically going to be the first central bank to cut rate in June, major central bank, right? We'll talk about the ECB, Bank of England, FOMC. The schedule that we have is that it's going to be ECB first, and then FOMC, and then Bank of England, if I'm not mistaken. Will the dollar yen come back to 150-ish if there's an intervention? Yeah, it will. It will actually go down lower, 149, 148, if there is an intervention. But if there's no intervention, no. The interest rate differentials is too much on the dollar Japanese yen, and on the other hand, we have comments coming out from insiders that the Bank of Japan is kind of reluctant to continue to hike interest rate. Although Ueda does say something that if we need to shift it, we will increase rates if inflation continues to push up higher, a lot higher than what what they're expecting. The problem with Ueda is that he will say whatever it is that's going to make the government happy, right? So Ministry of Finance says, dude, you got to say this, then they will say it. And that's the problem with the Bank of Japan that we have right now with under Ueda. I do not have any trust on what he says. Ueda collecting money for intervention. Yeah, look, do you know how the intervention happened? I think I already published an article on how the intervention kick in. Number one, if the intervention is going to happen, for example, 152 right now, right, on the dollar Japanese yen. So we're supposed to talk about inflation, but there's nothing to talk about inflation. We already have the inflation numbers. The Bank of Japan, the Ministry of Finance had to call the Bank of Japan, say, dude, can you guys do some rate checking on what's the rate right now? Should we intervene? How much does it cost? Is it going to be expensive? Then the Bank of Japan is going to come back to the Ministry of Finance. Ministry of Finance is going to calculate everything and say, okay, this is our budget. If we intervene, how fast can it pull it? Or they could say, oh, you know what? 152, 153, it's okay. I think we'll wait a little bit until 155. We don't know what's going to happen. But any given moment before the real intervention happen, a rate checking will happen. And when that rate checking happens, we're probably going to be looking at maybe a 1 minute drop of about 1 to 2 yen. But if a real intervention happened, like in the one in September 2022 and October 2022, we are looking at about 5 to 10 yen. That's 500 to 1,000 pips within 5 minutes. All right, that's if an intervention happens. So you're not going to miss it. So as I said, I'm waiting for this one to push about 152.50. If it does, we want to get out 153, and we want to create a sell limit at 153. There's a lot of sell orders at 153 to do some profit taking that could push it back down to about 150, 150. So tempting. All right, Pound USD is already closed out. Euro USD is kind of sticking up a little bit. But yeah, Pound USD exactly at 1.26 we got out. Euro USD, it's still pushing down a little bit lower on this one here. Gold, no, this is the reason why this is the reason why I don't want to trade gold. It's going to take me a long time, and there's a reason why. In the outlook, I say just be cautious of gold for the past 2 weeks, right? Maybe next week on Monday, I'll actually give you an explanation on why gold prices continue to go up. We have done research on this one. It's not just geopolitical concern. It's not just economic instability that we have here. What we're looking at is the scale of the governments buying back gold right now. So that's number one. Obviously, number two is the euphoria that we have. There are actually a lot of factors. The reason why gold doesn't want to come down at this point in time. We cannot pinpoint what is the actual reason, but we do have several attributes to why gold prices is still holding up pretty well. But as I said, it's probably going to take a while, and I'll see if I can publish an article for this one here on the Telegram channel. I'll send it to the Octa education team and see if they can publish that in English for us. But I'll have one ready for you guys on Monday, so you guys can actually have a read on it. And don't just blindly speculate on gold. Just be honest. This one here is super risky. This is, it's look at the very tip of the iceberg. At any given moment, gold can actually collapse. So just be mindful. All right, we haven't seen a proper correction. We're so far away from any visible support level. It's too much risk here on gold, and obviously we are at the all-time highs yesterday. It is an all-time high every single day for gold. This is really pushing up the limits on what gold can do. Obviously we have 2350, kind of a little bit of a barrier here. Beyond that, obviously 2,400. Then everyone is starting to say, oh, it's going to be 2,500. And believe it or not, some analysts are actually saying it's going to be 3,000. I don't think that's going to happen. But there are reasons. And a lot of this actually comes back to history. We need to take a look at 2008. We need to take a look at 2012 and the reason why gold starts collapsing beyond that, and why does it take so long for it to actually start recovering again. There are actually reasons attributed to that. All right, intervention started? Really? I don't think so. If intervention started, we will be down here by now. We will be down here by now, right? This is probably people getting scared, They got in at 152, maybe 151, and everyone is saying like, oh yeah, you know what? It hit 152.50. Let me just take my profit out. But yeah, what we're looking at is a small scale of profit taking. If it is a huge scale of profit taking, this would have reversed by now. This is not an intervention, guys. This is not an intervention. Profit taking, maybe. Intervention, no. If there is an intervention right now, it wouldn't have created that wick. It wouldn't have just bounced back off 152. Notice what's going on here. Everyone that missed at 152 now wants a 152 price. So if there's a profit taking that comes back to 152, there's already a buy limit at 152. So things have changed. So I don't think this is an intervention. As I say, with an intervention, what we're looking at, we would actually be at, we will be at 149. I'll be honest, we will be at 150, 149 if there's a rate checking. If there is a real intervention, we will be at 145. Okay? We will be at 145. So this is not an intervention. Yeah. Beginner, and I would like to know more about the stock market and how to trade. I've already sent out plans to hopefully be able to do a session on stock trading. Because if you didn't know, with Octa, you can trade stock markets. There's actually individual stocks that you can actually take a look at. I'm looking at the NVIDIA prices right now. But, there's a lot more, right? You can take a look at that. American stocks, go ahead. There's a lot of them. As long as they are in the US 30, I believe they're actually going to be there. Australia, you can trade some of the bigger one. Even Japan, you can trade some of the better ones. Too bad Nintendo is not there. But yeah, even Singapore, if you want to. So individual stocks are actually available on MT5. So if you're still on MT4, you want to trade stocks and you want to start dabbling into the stock market, you can go onto the MT5. Just contact Octa team. They'll be able to help you transition. But yeah, a lot of the stocks are there. All right, we're going to see a little bit of a profit taking happening, especially on the Euro USD. I think we're looking at the Euro USD being pushed back. What happened to my chart on the Euro USD here? All right, so we'll see what happens. If it's on the early time frame and the Euro USD pushes up above 1.08, we might actually see a little bit of a pullback on the Euro USD. But this one, the one that was just triggered, this will actually be a swing trade for now. Stop loss is going to be at 1.09, so this is actually going to be huge. And in terms of potential target for this one, we are actually going to aim for 1.0650. That's in line with the outlook that we have. So if you want to shift that into a swing trade for the Euro USD, you can do that. Let me just show it to you. All right, so this is the Euro USD, and we have been keeping an eye on this. We're just waiting for that 1.08 to clear, because that 1.08 was previous sell side liquidity. We have been talking about this actually on was it Monday? I think Monday. Yeah, it was last Monday that we see price touches the resistance. Well, last week it actually touches resistance, and then it break below 1.0850. So there's a lot more room to go. I'm aiming for 1.0650 on the Euro USD. So this is actually a swing trade. So if you have taken a short position at 1.08 or slightly higher, your stop loss is going to be about 1.09, and your take profit is going to be at 1.0650. This is going to give you about 1 to 2 risk reward ratio. You are risking 100 pips, but you are aiming for more than 150 pips as well. I saw gold again. I wouldn't be so. Look, I have zero comments on gold, but yeah. All right, say if you sell limit on 153, what is the best stop loss to place? 153.50, 154. Because if market goes beyond, if it touches 154, there are actually a lot of orders for a buy stop at 154 as well. Because remember, for the Dow Japanese yen, if there is no intervention, if there's the market is there are crazy people like me doing this. I'll be honest with you. And the reason why I dare to do this, because we have seen in the past in terms of how the intervention just doesn't work. So even if there's an intervention, eventually we will have the upper hand, right? We have surpassed 152. This is the level that the Dow Japanese yen did not ever surpass in 2022, right? Well, that's where it failed. 2023, we have a little bit of a rate checking. It failed again. We have surpassed this. So yeah, we are pushing their buttons right now. Traders like me are pushing their buttons, and we are testing the limits. And the reason why we want to test the limits, we want to see where the intervention is actually going to kick in, because once we know where that threshold is, because everyone is expecting 152, right? So if you thought that was 152, a lot of retail traders are probably getting wiped out. They probably get wiped out by the market right now, because they have a lot of sell orders at 151, at 152. Some huge analysts are even saying, well, you know what, they're going all in on the yen gaining strength and whatnot. They have a huge bet on a short on the Dow Japanese yen. Obviously, they're pretty much wiped out right now. Okay. Reason being, 152 is such an old level. That's a level that's been around for 2 years in terms of intervention. So we know the market has been sticking to that level for quite a while right now. It's been trying to push it. It's just that no one is brave enough to push it, because we don't have the data to back the US dollar in terms of strength against the Japanese yen. But what we have from the inflation number, if we take a look at the inflation number today, which is something I actually want to show you guys, right? The rate of inflation here. Take a look at the energy inflation. It has gone up. Remember, it was negative 4.65, and then it was negative 1.9. Today we have that pushing up to 2.12. Services inflation continued to go up at 5.97. Rent inflation is pretty much the same at 5.66. Food inflation is unchanged, so we don't see that drop. And this is the reason why a lot of traders that are anticipating for that yen trade to happen, we now have the information, we now have the backing of the data that the inflation has gone up, and for the FOMC to potentially not cut rate in June. That's the expectation. That's the reason why we will take that trade towards 153. Now we need to know the threshold. Is it going to be at 153? Is it going to be at 155? We don't know, right? But if there's a rate checking at 153, for example, then we know that's going to be the new threshold. But what if the Dow Japanese yen doesn't do any rate checking at 153? Then we are going to push their buttons a lot higher, 154, 155. And the reason why we're not afraid, our positions, as I said, as a disclaimer, our positions are so far below. We have our positions below 147. I have my positions below 147, 148, 150. Those are my positions. So, if it does happen, if we see that whipsaw on that rate check, I can move my stop loss to break even and I'm still going to be okay. It's not going to be a big deal. I'm not going to lose a huge amount of money at all, right? But I've already earned from something else because I'm doing a carry trade on this. So no big deal. So we are trying to push this, and if there's no intervention, we will continue to push this higher on the dollar Japanese yen and the euro yen and sterling yen. But the focus is definitely on the dollar Japanese yen. Is there a chance that Bank of Canada could cut tonight? I doubt it. I doubt that would happen. All right, cool. So we good for tonight? That's pretty easy. It's a pretty one-directional. Market's been good to us for last week and this week. What's my outlook on NASDAQ? This is a code, by the way, if you guys want to use it, non-farm 2024. If you have any questions about any other outlooks you want me to take a look at, let me know. Okay, I'll take a look at NASDAQ for you. But for NASDAQ, this is actually, I would say it's actually stable. That's the reason why I don't actually want to do the buy stop and sell stop on NASDAQ. Let me just find that here. Okay, so this is NASDAQ, and this is on the daily time frame. Obviously, we're still hovering about 18,000, right? But if you take a look closely, in terms of the support level that needs to be broken, it's actually a little bit lower, closer to 17,800, right? Technically, we're still in this range, and that's about 17,800 to about 18,400. That's on the daily. And this is kind of the estimated volatility on NASDAQ at this point in time. Obviously, for NASDAQ, it's not one directional like currency market towards inflation and stuff. NASDAQ in particular, we are going to start our quarterly earnings next week for the tech sectors. So I wouldn't want to sell off NASDAQ at this point in time. I would pay attention on NASDAQ, but in terms of whether I actually want to sell NASDAQ, no. Logically speaking and technically speaking, this is still above the Ichimoku cloud. We might actually be in for a little bit of a correction for NASDAQ, and that's completely fine. We can see a correction all the way down to 17,600, and I will still buy NASDAQ at 17,500 even, right? The quarterly earnings is going to get released next week, and if the quarterly earnings are good, especially for NVIDIA, Microsoft, AMD, Qualcomm, they are going to push this up, as well as Meta as well, right? Meta, Microsoft, NVIDIA. These three are the main things that you want to watch out for in terms of their quarterly earnings. If they are strong, a lot higher than what the expectation is, NASDAQ is going to get lifted up by them, okay? And that's the reason why I do not want to go short NASDAQ at this point in time. I'm still expecting for those data because we have the potential earnings to come in stronger than what the market is expecting. So we're looking at positive quarterly earnings for these three companies. Signing off. Enjoy your week. Market is better this one compared to March. As I say, March is going to be the toughest month because there's a lot of indecisions. End of the first quarter, everyone's just jittery. What's the first quarter going to be and whatnot? And that's why I said at the beginning in March, this is going to be a difficult month, and that's something I keep saying in the weekly outlook. March is going to be a difficult month. No, NASDAQ is definitely not ending, and considering that, yeah, I do expect the NVIDIA earnings to start to pick up. But NVIDIA earnings, you need to be very careful with NVIDIA earnings. The first quarterly earnings is actually not that huge, right? But the second quarter or the half yearly earnings, that's the one that a lot of people are probably going to be watching out for, and that's going to be in June, April, May, June, July. That's going to be the number that a lot of peers are waiting for. So yeah, we still anticipate a lot of good stuff coming out from NVIDIA. Projected target for this one here has now been locked in at 1,200. So we might actually see this one pick up again. If you take a look at the momentum here, it's tapering off, but we're not looking at a huge correction. So yeah, I'm liking NVIDIA, and it's still, as I said, this mimics the NASDAQ. So if we see NVIDIA push up, NASDAQ is going to push up as well. It's exactly the same positioning as NASDAQ. It is still above Ichimoku Cloud, potentially testing Ichimoku Cloud. 850, 750 will still buy NASDAQ at this, NVIDIA at that level. All right. Cool. Okay. thanks for joining in, and hopefully you guys enjoy your profits from last week and today. It has been a good run. It's been an interesting one, and I think it puts the market at ease at the very least. With the U.S. numbers, we don't get a mixed numbers from the labor market. We don't have a mixed number from the inflation data. Both of them are strong. Then yeah, we should expect a little bit of a stability right now. It would give a little bit of a an insight into a lot of traders out there that yeah, the U.S. inflation is not coming off anytime soon, and there's a reason for that. There's a reason why the FOMC is reluctant to start cutting interest rates soon. Okay, so yeah, enjoy your week, and I'll see you again next month.